Join me as I dive into the world of stocks and try to figure out if SOXS is really the next big move. SOXS has been gaining attention lately, and for good reason. This stock is an inverse ETF, designed to profit from declines in the semiconductor industry. With the market being as unpredictable as it is, it's no wonder investors are looking for ways to hedge their bets or capitalize on potential downturns. SOXS offers an interesting opportunity for those looking to make a play against the semiconductor sector. Investing in SOXS isn't without its challenges. Market volatility is a major concern, as sudden shifts in the market can lead to significant losses if not managed properly. The semiconductor industry itself is also highly competitive, with new technologies and products emerging all the time. This can make it tough to predict which companies will come out on top and which will fall behind. Another challenge investors face is the complexity of SOXS as a financial instrument. As an inverse ETF, it uses derivatives and other financial tools to achieve its investment objectives. This can make it difficult for some investors to fully understand the risks and potential rewards. Additionally, SOXS is not a long-term investment, it's designed for short-term plays, which can add another layer of risk. The performance history of SOXS is also worth considering. Like any investment, past performance is not a guarantee of future results, but it's still an important factor to consider. Over the past few years, SOXS has seen some significant gains, particularly during times of market downturns. However, it's also experienced some sharp losses, which can be a concern for investors. SOXS has had an interesting run recently, with some pretty significant price swings. Experts are divided on its future potential, with some seeing it as a valuable tool for hedging against market downturns, while others are more skeptical. Some argue that the semiconductor industry is due for a correction, which could make SOXS an attractive option. Others, however, see the industry as continuing to grow and evolve, which could limit SOXS's upside. What's really interesting about SOXS is its potential as a contrarian play. When everyone else is bullish on the semiconductor industry, SOXS offers a way to bet against the trend. This can be a powerful strategy, especially if you're able to time your entry and exit correctly. Of course, it's not without risks, but for some investors, the potential rewards may be worth it. The most compelling argument for SOXS is its potential for significant short-term gains. If the semiconductor industry does experience a downturn, SOXS could see significant gains, making it an attractive option for investors looking to make a quick play. Of course, this is a high-risk strategy, and it's essential to do your own research and consider your own risk tolerance before making any investment decisions. In terms of concrete numbers, SOXS has been showing some interesting trends lately. Its daily trading volume has been picking up, and some technical indicators are suggesting that it may be due for a bounce. However, it's essential to take these trends with a grain of salt and do your own research before making any investment decisions. So, what's the takeaway on SOXS? It's a complex and high-risk investment that's not for everyone. However, for those who are willing to do their homework and take on the risks, it could offer an interesting opportunity for short-term gains. If you've got thoughts on SOXS or other investment opportunities, I'd love to hear them in the comments below. And if you're looking for more insights on investing, be sure to check out my other video on the best stocks to watch in the tech sector.